I think that we get to 250,000 by the end of the year. It'll be bumpy along the way, obviously, but
Yeah.
that's sort of my end of year price target. And then $1 million Bitcoin is what I just got off stage talking about how they're going to print, I think, in the realm of $9 trillion-ish between now and that period of time. It's going to be interesting to see how regulations pay off for crypto, right? Because, or any other types of digital assets, because the boomers have stocks to sell. Does anyone want these stocks? Maybe to some extent. Do they want that big suburban house or whatever they have, or apartment in the city? I don't know. So I think there's going to be a massive issue in terms of if the younger generation wants to buy things that the older generation is selling and they need to sell those things to fund their retirement. How does that square? Are they going to increase taxes because the asset prices of things the boomers own and went down and they can't afford their retirement? So then they're going to tax the young more to pay for their retirement. And are the young going to accept that? I don't know.
Arthur Hayes opens with a rarely discussed but critical issue in mainstream finance: capital controls in the United States. He warns that we may soon see restrictions on foreign ownership of U.S. assets. One likely move: ending the withholding tax exemption that currently lets foreign investors earn interest on U.S. Treasuries tax-free, while American investors pay up to 30%. Removing this exemption would discourage foreign capital from holding U.S. debt, marking a potential tectonic shift in global bond markets.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
You said there is capital control in U.S. coming.
Yes.
On foreign investment ownership.
So I think they're going to start by taking away the withholding tax exemption. There's already talk of that happening where, foreigners don't pay the 30% tax that Americans do, getting interest on their bonds. So they're going to remove that. And so it's going to mean that, hey, maybe this treasury bond isn't so attractive and I'm not going to own that. I'll own something else. So I think that's going to start happening.
Does that mean a market crash?
No, because they'll print the money to make sure that all the foreigners who leave, they'll replace that with printed money.
Stocks have recorrelated with the 10-year yield, and so has Bitcoin. Do you see that correlation holding between these three classes?
No, I think that there will be some, risk off events, and we'll see bond market volatility heightened. I think Bitcoin will assert itself as a hedge against this. I think that we get to 250,000 by the end of the year. It'll be bumpy along the way, obviously, but that's sort of my end of year price target. And then $1 million Bitcoin is what I just got off stage talking about how they're going to print, I think, in the realm of $9 trillion-ish between now and that period of time. And that is, Fannie and Freddie, the government support entities that are allowed to create mortgages in the U.S. Yeah. They will print $5 trillion. You will have probably up to $1 trillion purchased by the banking system due to supplemental leverage ratio exemptions and purchasing things that the foreigners are selling. And I think the banks are going to because they now don't have to hold all this equity capital against their treasury book. Yeah, they can lend more into the real American economy. And so you're going to see the amount of loans going to manufacturing firms increase, which is, again, that's an increase in credit, and that will make its way into crypto as well.
When the Fed printed a limited QE back in 2020, all asset classes went up. It wasn't just Bitcoin. So this is good news for Bitcoin, what you just said, the thesis you laid out, but it could be good news for everything else, including stocks, gold, potentially even bonds as well. Why would Bitcoin in particular outperform everything else in a
So Bitcoin has a fixed supply. It's obviously a much smaller market in terms of market cap. And so if you have a lot of things chasing a very small door, then the price goes up on the margin. And so that's why Bitcoin has been the best performing financial asset in the last 15 years.
Yeah, but do you see them buying more Bitcoin? They haven't done that yet.
I don't think it's politically palatable to buy Bitcoin and print money. I think if you're going to print money, either it's tax cuts or it's build a bridge or build a hospital, these sorts of things that benefit more people than just a small sector of people who own Bitcoin. All your altcoins, most of them are probably not going to go up in price again because they don't have product market fit. They don't take any of the revenue and bring it back to the token holders. And so they're like high FDV, low float bullshit VC coins. And so they're not going to do very well. And that's why you've seen like down only for Barrett Chain, maybe Modon, whatever launches. So these types of projects, these very hyped, big round, big fundraising round projects, it can be very hard for them to go up in price because they don't actually have any clients that spend money. But there are projects that are very good that have, product market fit. People spend money. That money goes from the protocol to the token holders. And I think the small subset of products that do that, they're going to do very well.
Pendle,
EtherFi, yeah. Stuff like that. Basically Bitcoin dominance is very predicated on ETH. So if ETH doesn't move, then it's very hard for that ratio to really move that.
Will ETH move?
I think so. I think ETH is very hated. People don't like it. And so if I want to bet on something, the change in the cycle, I think ETH could outperform.
How is Maelstrom positioning itself in terms of your allocation priorities right now?
So most of our portfolio is in Bitcoin, a decent slug in ETH, and then we have a lot of term sheet projects. So things that are rolling off because of advisory and investments, and things that we've bought on liquid, probably EtherFi and Pendle are probably our two large positions.
How often do you rotate in and out of Bitcoin?
Not that often. Maybe we make one or two big buying or selling things every year. Because again, I don't want to be trading too much.
Yeah, you don't have like a rebalance mandate.
No. There's no mandates. The mandate is outperform Bitcoin. So if we can invest in a new project and it outperforms the Bitcoin capital that we had to sell to invest, that's good. And then we'll buy more Bitcoin with our profits. It's going to be interesting to see how regulations pay out for crypto, right? Or any other types of digital assets, because the boomers have stocks to sell. Does anyone want these stocks? Maybe to some extent. Do they want that big suburban house or whatever they have, or apartment in the city? I don't know. So I think there's going to be a massive issue in terms of if the younger generation wants to buy things that the older generation is selling, and they need to sell those things to fund their retirement. How does that square? Are they going to increase taxes because the asset prices of things the boomers own and went down and they can't afford their retirement? So then they're going to tax the young more to pay for their retirement. And are the young going to accept that? I don't know.
What would you guess?
I think there's going to be a lot of intergenerational conflict. I don't know the outcome of it. But it could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem.
Everything leads to money printing.
Basically.
That's the solution of everything.
Does money printing lead to more degen activity usually?
Yes, because again, if you don't have a lot of financial assets and you're watching all this inflation happen all around you, you have to use more leverage in the little bit of savings you have to escape.
Why is there less degen interest now than in 2021?
What interest in what though?
The retail interest in the altcoins, and actually some people track also crypto channel volume, viewership volume. It's significantly lower now than 4 years ago, despite the fact that Bitcoin and many other things have reached new highs.
Again, I think a lot of these coins have not performed very well. They were priced wrong. They were priced too expensive. And then their actual fundamentals, when you actually said, okay, you're launched, the hype is over. Okay, where are the clients? Where's the revenue? Oh, we don't have any. But this thing is a 5 billion FDV. Well, you can't 10x that. It's just hard. So you go from 5 to 50. It's easy to 10x 100 to 1 billion in terms of on the marginal price basis. So I think it's just the price is too expensive.
Is it too far-fetched to say that Bitcoin has become an institutional instrument now and the retail crowd is just no longer interested in that?
No, I'm sure there's lots of retail interest in Bitcoin. It's been well performing and it's the easiest one to understand.
Hayes believes this trend will echo across Asia from South Korea to Singapore, Malaysia, and Thailand. Countries that once suppressed their currencies and exported capital may now be forced to reverse course. The result, capital inflows stronger local currencies and a major shift in global investment patterns in this emerging landscape. These nations aren't just trade hubs, they're becoming prime destinations for capital in a world that's gradually de-dollarizing.
Foreign money went into the U.S. because the U.S. markets have been the best performing, whether it's stocks, bonds, or real estate. And if that money is leaving and it's going to go back into their local markets, then the U.S. markets don't do so well. And maybe it's better to own Taiwanese stocks or Indonesian stocks or Thai stocks or all these other emerging market countries who are basically going to say, okay, we're forced to repatriate this money back on shore. Our currencies appreciate. Our consumer gets wealthier because now they can purchase more things, and maybe people want to build business domestically to service that economy. There are some interesting articles written in the FT by, I think, Brad Setzer and another economist, basically documenting how Taiwan life insurers are probably some of the richest institutions in the world who've been investing abroad. And essentially, Taiwan is obviously a big global manufacturing hub, semiconductors and all that. But the government and the central bank has a policy of keeping the Taiwan dollar very, very weak. And so to do that, they have to create Taiwan dollar local liquidity, which obviously is the reason why apartments are so expensive in Taipei and other cities. And they accumulate dollars, but they don't want to look bad like currency manipulators to the United States government. So they take all these dollars and they funnel them to the Taiwanese life insurers. And then these life insurers go and they buy bonds and enter in all sorts of structured derivatives with large banks. Essentially, they have a lot of U.S. Treasury bond exposure. And also a lot of hedge funds like to fund themselves in Taiwan dollar because of this persistent weakness that is encouraged by the government. And then they engage in massive carry trades. And so what happened in the first week of May is that there was this fear that, oh my God, what if the Taiwanese lifers start going out of the Treasury market, taking that money and repatriating into the Taiwan dollar? And basically a lot of these hedge funds exited their carry trades and got stopped out. And that's why you saw the 6 or 7% move in the Taiwan dollar. And I think that the authorities didn't want to step in and create more money in Taiwan to basically reverse those flows, because they wanted to show to the Trump team when they're negotiating that, hey, we're not about to let our currency continue to weaken. We accept that we're going to have to allow the Taiwan dollar to strengthen. And I think that's why you had this sort of massive move in the Taiwan dollar. And I expect it to continue to strengthen over time.
Do you think that's going to happen in other Asian countries?
Yes, and it already started. You saw it in South Korea. You see it to some extent in Singapore, Malaysia, and Thailand. Any of these countries that run these persistent programs of currency weakness, accumulation of dollars in their reserve account, and investing abroad, that money's coming back. I don't think they care, right? A lot of people are just invested in the index. And so they own an ETF, and the ETF owns a lot of stuff, right? That may or may not agree with their particular sensibilities, but they don't care. They just want to be in the index.
With exchanges and centralized exchanges becoming more mainstream, do you see a scenario in which they start siphoning deposits from the regular person from large financial institutions like JP Morgan's and the Bank of America's of the world?
I don't think so, because these banks have better distribution networks than the crypto companies.
So there's no direct competition in the foreseeable future.
Oh, there absolutely is direct competition, right? So if JP Morgan offers the ability to buy Bitcoin and Coinbase does, it's the same Bitcoin that you're buying, right? So then it comes down to really just fees. And so can JP Morgan offer a 0 fee trading because they make so much other money in other places around the bank versus Coinbase offering 0% trading? I don't know. I'm not an expert on the Coinbase revenue drivers, but I would imagine a lot of the revenue comes from this very high margin brokerage business that they operate. And so if a JP Morgan or a Bank of America says it's 0 fee Bitcoin trading, bring your balances here, bring your bank deposits here, well, then what is Coinbase going to do?
Hayes dives into the brewing competition within crypto infrastructure. The key question, can centralized platforms like Coinbase hold their ground against Wall Street heavyweights like JP Morgan? He believes it all comes down to fees and distribution. If a player like JP Morgan offers 0 fee Bitcoin trading bundled with traditional banking services, Coinbase's fee-driven model could come under serious strain. After all, it's the same Bitcoin. The difference lies in who's offering it and at what price. The battle for Bitcoin is just beginning. Watch this next.